What is up, ladies and gentlemen, and welcome back to the Bullish Buzz. Yet again, we have another amazing portfolio review for you guys. I'm going to be breaking down my portfolio, how we did in 2025, how we're looking for 2026, what my full forecast is. We're going to break down every single holding. We're going to cover it all. So let's not waste any more time. Make sure you guys do drop a like and subscribe as always. It does take a good bit of time to make these videos, so I really do appreciate the support. Now, in this video, I do want you guys to leave a comment down below what kind of holding you guys would suggest, because I do have a lot of cash that I am currently sitting on. Now, without further ado, here is the portfolio. You guys can see we are already off to a hot start, killing the S&P, may I add, up around 2% so far year to date. Now, in 2025, we were up a whopping 28%. Now, overall, this was a great gain for us during that year, as we have been putting a lot of money into this account through options. If we hadn't diluted this account by putting over $40,000 into this account this year through options, our return would be much, much higher. But nonetheless, we still more than double outperformed the S&P 500, as the S&P 500 was up around 14% last year. Now, overall in 2026, I am looking to be over 50% in total gains, as we are going to start shifting where we do put those option profits. That should let us continue the high growth that we are seeing within this portfolio. Now, still outperforming the S&P so far this year, of course, small sample size, but nonetheless, still getting it done. So overall, let's start off with the few option contracts that I do own, where I do own a EOS $18 call that I'm selling, and you guys can see we're up $135 or 77% on that. We have a Zeta call that I'm also selling, $22 strike price, 5 sells right there for January 30th. I'm a little worried on this, may have to buy it back, but nonetheless still looking great. We also do have a Hood 190 call for April 17th. I have one sell on that, and it's up about 50% for about $131. Now, I'm thinking about buying back the EOS contracts this week. I'm also thinking about possibly buying back the Zeta contracts if the price does come back down below a point where I am positive on these calls. But overall, Zeta looks very, very bullish, so I am a little bit worried about these calls. I'm not going to let Zeta get called away. I'll just spend the money to get it back, but overall, still looking great. Now, I do want to first talk about some cryptos in Ethereum, because this is, funny enough, my worst position in my entire portfolio. Down about 20% for about $1,600 right now. Definitely not the coolest thing ever, but I do want to be transparent in how it looks on this. So I am down on this. This is the worst position in my portfolio, and for that to be our worst position, I'm actually quite proud of that. And then also we have about $100 in Bitcoin. We have about $2 in Solana and about $3 in Dogecoin from the Robinhood Holidays event. Now, getting into our first and main holding in this portfolio, this is my largest holding right now. We have Meta. Now, Meta is the largest holding, and I'm currently break even, but I do have just about $20,000 put into Meta right now. 30 shares at an average price of about $650. I want to keep buying this position as Meta does fall, because I do believe that this is one of the best companies out there. I believe that they are one of the best, Mag 7 stocks. I believe that they have some of the best upside for Mag 7 stocks, and I believe that they are already at a discount. So anything below 650, which is my average price, I would be more than happy to continue to buy. Now, I did kind of forget to talk about this, and I do need to mention this real quick, guys. We are sitting on a boatload of cash. I have about $15,000 in cash right here. You guys can see I have $9,938, but I also do have around $5,000 wrapped up in a possible Amazon play that I am looking at right here. We'll talk about that in just a second, but just know that I am sitting on a lot of cash right now, as the market doesn't look the most bullish. So we'll talk about that more, but I am sitting on a lot of cash, so keep that in mind. Also, we have AMD next. We are up about $704 on AMD most recently, and we are up around $540 or around 4% in total on AMD. Now, my average price has been bouncing around a good bit as I have been continuing to buy. I really don't care what my average price is, because I do believe that this is a trillion-dollar company in the future, and that would lead me to have, gains to the point where I don't care what my average price is right now. I easily see AMD getting over $400 in the next couple of years. So by no means do I care if my average is 225, 215, 200, or 195. I don't care. I'm going to continue to buy it down and continue to DCA into this position, whether we are positive or negative on it. So nonetheless, AMD is a great position for me so far. I have about $16,000 in this position. And like I said, we are up a nice little $540. Now, I do also want to mention that we have made a lot of changes recently, so this is why I'm not really up on a lot of these positions. It's going to change here with Hood and Zeta, but overall, we have moved a lot of stuff around, taken a lot of profits towards the end of the year. So that is why, our year-to-date profit is so much. But right here, you guys can see that I'm really not up too much on those two main positions in Meta and AMD because they are newer positions. Now, Hood, we do know, is a killer. We are still up around 171% on Hood right here for about $7,000 in gain. You guys know I've already taken all of my profits, so this is simply just the profits playing. Right now, I was able to take all of the money that I originally invested into Robinhood, take that out, and then some. So overall, we are looking very good on this position. You guys can see it's worth about $11,000 right now, and we are up over $7,000. One of my favorite positions, one of my favorite companies, and a company that I do not believe I will ever sell. I believe that Robinhood could also be another $500 billion to $1 trillion company in the future as they do continue to expand, and we see Cortex and Robinhood Social come out in the next few years. Now, next, we have Zeta. 500 shares of Zeta. You guys know I'm selling those covered calls. A little bit worried about those, but not too bad. Overall, Zeta is still looking great. We're up about 30% on Zeta for about $2,299 in total gains. If you guys do remember, I did sell about 200 shares of Zeta a few weeks ago for about 32% in gains. Locking that in was a really, really nice thing to do. And overall, very happy that I've done that, even though I do believe that price will go higher. Now, our market value on this is just about $10,000, so we are looking very, very good here. It is a healthy position of about 13.9% of my account. So overall, we can see that Zeta is a great position. I believe that this is one of the best stocks for 2026, and I believe that they will be a large, large riser in 2026 as a whole. Now, jumping into our last position that we are owning currently, this is going to be EOS. Now, EOS hasn't had the best couple of months here. You guys can see over the past 3 months, we were green by about 50%, but all the way back down, only green about 4% here. Nonetheless, I'm still up 35% on this position, but at one point, I do want to mention I was up over 100%. We did take trims, of course, so not too worried there, but overall, I'm happy to see us pull back down. I do honestly want to see us come down to $10, where I'll look to grab another 500 shares, because I really do believe that this is a great company that will inevitably go much higher. Now, we were up around $780 on this position on Friday, December 2nd. Yes, so looking pretty good there. And then overall, we were able to see that we can see a total return of around $1,700 currently for about 35% in total. Now, this is a small position for me, really, when you look at it, and it's only $6,500 in total market value. That is why I'm saying I would like to continue to buy more if we do get down there. I also do love the premiums on this. You guys can see I'm up $135 on these calls. I believe I sold these covered calls for like 40 cents a pop. Super, super good premiums. I love selling covered calls on EOS, and I'll continue to buy back the shares if they do get taken from me. I believe EOS is a great company. I believe that they will see not only $30, but possibly $60 a share in the next couple of years. So this is the entire individual account. Really quickly hitting on Amazon. I do have a buy for Amazon. Hopefully I can show you here. Yeah. So I have a buy for 25 shares at a limit price of $210. So I'm looking to buy those 25 shares at $210 if Amazon is to get down to that price. And currently with Amazon sitting at $226, it is a possibility over the next couple of weeks, as I do believe that the market overall is looking for a dip. Now, that is all I have for this account. Once again, we were up around 28% in 2025, so we are looking very, very good. I do quickly want to hit on my 1 to 5K challenge because it is important to update you guys on that as well. You guys can see that we absolutely killed it this week on the 1 to 5K challenge. We have just started this, and we are currently all the way up 68% for about $686 in total gains. So far, we are able to make around 500% on one single play on Friday to kick off the new year. Y'all know that was absolutely electric, and I do have a video which is linked in my description down below where you guys can find that full breakdown on that trade that we did take. But overall, let's jump into the Roth IRA because things are getting spicy over here as well. You guys can see Roth IRA is killing the S&P, and I mean killing the S&P. The S&P was down on Friday, but the portfolio was up around 3.44%. Banger. So overall, we're killing it, of course. And you guys can see on the 1 year time frame, we were also up around 23% on this account. At one point, we were up around 45%, and then we ended up seeing a dip towards the end of the year. So overall, still looking great. Basically doubling the performance of the S&P over this year. And once again, I do want to note that we are sitting on a good bit of cash over here. I do have my contributions open for 2026. So really, I have $7,500 that I am looking to deposit in here. So basically, we are sitting on $10,000 in cash in the Roth IRA. I'm looking to get big buys on dips if we are to see that come to fruition in the next couple of weeks for the overall market. Now, Meta is the first holding here. I do also want to talk about it. We do have a SoFi $30 call that we are selling for $25 in premium. Nothing too crazy there. But Meta is one of the first positions on this right here. I bought this after earnings, and I will say this was a poor buy on my part. This was a poor buy. I bought in after earnings because that was a one-time tax that they did have to pay. And at the end of the day, I'm not mad at all. It was a poor entry, and I should have waited for a better entry, and I'll be the first to say that. But overall, I'm not mad at this. I'm only down 5% for about $130. Meta's a great company. I know it will continue higher, but I did get a pretty bad fill on this, and I'm going to be the first to admit that. So Meta here, you guys know I have all the Meta in my individual account. Also have some Meta over here. So overall, we're looking very good on that. Next, I do have UNH. I do want to say I did take profits on UNH. I still believe in this company, but overall, I took about $500 in total profit, and it actually freed up around $4,000 in cash for me. So you guys can see we're still looking great on UNH here, up around 17% for about $486 in gain with the shares that we have left. We have 10 shares at an average price of $287, and my market value is now around $3,366. So this is still a great position. It's paying me a good dividend. I did wait until I got my last dividend before selling the shares, and I was able to get about $58 in dividends. So that was a really, really good, chunk of change just for holding this company for about 3 months. Now, next, we are going to have SoFi. I'm going to be honest, I'm not loving this position. I am thinking about cutting it, but I am getting a good bit of premium on these shares. So I think I'm just going to keep selling covered calls, a dollar out of the strike until they are taken from me. I am going to continue to sell them at a point where I am profitable. So not only am I going to make money on the premium in which I sell, but also on these shares if they are to get called away from me. So I am looking at a $29 covered call for, inevitably after we do finish off the call that I have right now at $30. I'm going to look to probably sell realistically actually the $30 strike price until it does get taken, and maybe even just a dollar higher until we work our way up to the point where it is taken from me and I do get profit and premium from this play. Now, next we have BE. BE is a great stock that I am really, really enjoying. We had a great day on Friday. Most of my gain, actually all of my gains and then some came from Friday alone. BE is a great stock that I do believe will have a great 2026. I have started to buy this company. I'm just telling you guys right now, a lot of that $10,000 is going to go to this stock and the next stock, which we will talk about. But overall, I started this position with about 30 shares where my total return is already around $217, up around 8% already. So looking really, really good. Hopefully this 14% intraday gain can stick and we can see a little bit more upside to come in the future. Overall, this company is worth about $20 billion, and I believe that this is easily a $100 billion company over the next 3 to 4 years. Obviously, there is a lot of things that they have to do with their financials and technical stuff, but overall, I do believe in this company to get that done, and that is why I've chosen to invest in Bloom Energy. Next, we're going to have Nebius. Bang. Nebius is a killer, and I'm already up around $84 on Nebius. I bought this one on Friday, and we're up around 4%. I bought this one intraday, and I bought this one pretty much at market open, and then ended up running towards the end of the day. So still a pretty good buy. I'm not exactly thrilled with this entry price, but once again, I do not care. I believe that this company is going to go higher, and overall, I do believe that a dip is coming where I am going to look to buy the dip heavy. Now, I do always like to get a starter position in here first so that I can work off of that. Say we aren't to get that dip and I am wrong. I don't want to miss out on this run. So I'm still going to leave some shares in. I do understand that I am most likely going to be negative on these shares for a month or so, but overall, I'll be able to bring my average cost down and we will be green before 95% of other traders as we do DCA in the correct fashion and get a lot in at the bottom. But overall, this was the portfolio. Once again, the retirement account is sitting at just over $17,700. We did outperform the S&P by almost 2x in 2025. Looking to do that again, that is one of my main goals, is just to outperform and basically do double what the S&P does. If it gains 10%, I want to gain 20%. If it gains 20%, I want to gain 40%, so on and so forth. And we were able to achieve this goal in both of our accounts in 2025. Once again, I do want to say that we have put almost $40,000 worth of option profits into this individual account right here. So the returns are, lessened, if that makes sense. Our total returns, I do believe, works out to just over 126% if we did not invest those option profits. But overall, I don't really care about return. I know in the back of my mind that we are able to, 1000x our portfolio year over year with option profits alone, and hopefully with the way that we are starting to do futures, we can do much of the same. Now, of course, guys, that is all I have for you guys today. I hope you guys do let me know in the comments down below what your guys' top position is, what you guys think I should do with this over $20,000 in cash that I'm currently sitting on, because I am going to have some pretty interesting buys coming out very, very soon as the market does continue to dip. I am going to be buying heavily on that dip, looking to make a quick flip into the middle of the year. Hopefully, we can get a quick flip on that, make a good bit of profit right there, take a lot of that risk off, and kind of coast throughout the year before we do see some sort of correction, which is inevitably going to come, sooner rather than later. Don't want to scare anybody with that, but it is very important to understand what is to come the longer that you do go into a bull run. Now, by no means am I scared of this market, but I am going to be making the right choice moving forward. Making a good conservative choice is what I'm going to be sticking to after the insane run that we have seen over the last couple of years. My portfolio has grown from 3,000 to 86,000 and change currently. There is no reason to give any of that back to the market. I'm going to be very safe. We'll wait. I would like to exit a good bit of my positions before we do see a correction. And overall, I would like to see about 50% of cash being held through a market correction or crash or whatever you're going to call it. Now, of course, let me know in the comments down below what you guys thought about this video. If you guys like these kind of styles of videos, if you guys agree or disagree with my holdings, and what you guys think I should do with that cash. Now, as always, I hope you guys have a great day. Check out the 2 videos on each side of me today, and I will see y'all in the next video. Peace.